Good evening, ladies and gentlemen. The time is 12:23. It is the 4th of February. And first of all, we had a very interesting overnight situation in global markets. Facebook crashed 25% or more, 27%, I think, after bad results. Everyone shorted all other tech stocks. I think Twitter was down some 8%. Snapchat was down a good amount. But then after that, Amazon came up with results. So there were huge shorts in the system. And because of those results turning out to be good, it's now up 17%. I mean, you have to understand these are all companies with $1 trillion market cap. So when a $1 trillion market cap company loses 20%, like $200 billion, that's equivalent to like a Reliance, right? So it's like they're losing a Reliance fund. So all kinds of volatility there. That sort of I don't know, volatility we've never seen in our large cap stocks, not across multiple. But that's what happens when you're in this huge valuation bubble. So anyway, on that side, we opened on our Nifty, we actually opened gap up. A little bit of an IV crash at the open because we opened a little gap up. Mainly because US futures were in the green, so because of that opening gap up. From there, we saw steady sell-off. Now, I had a bad entry today because unlike previous days where entering early might have given me a little bit of an advantage because IV got crushed after that. Just as we opened, there was a big crush overnight. And as I entered my position, 16,900 put and 18,000 call. What was my idea? I'm selling around 23, 24, 25 rupees. And the idea is, okay, maybe it loses about 8 points by the end of the day. Shouldn't have too much of a problem. But we saw this stiff red candle breaking yesterday's low. And into that, I sort of felt forced to move down my calls. So I'd entered these puts at around 25. They went up to 31, 32. So I rolled down my calls. Here, just 3 minutes later, I rolled them down to 7,900. And what was happening is, as soon as we saw this recovery, huge put side crash. Like the put that went to 30 came back down to 17. So just as we were about testing, so on this candle here, exactly the 930 candle, right, where we were testing this opening high, because the assumption while rolling down the call is most likely open is going to be high. I moved up my put options. So I moved them up to 17,000 at about 30. And that was the thing. And then from there, this continued up move. My idea, and I posted this on Twitter also, is that I will maintain a negative delta. So how do you manage a day like this? When you're seeing a down move, you're seeing this big increase in IV. When you're seeing an up move, you're seeing a big crush in IV. So by keeping a negative delta, my call was trading at 45 and my put was trading at 25. By doing that, even if the market continues to go up, the call will not go from 45 to 50 as quickly as that put might go from 25 to 30. So, I mean, if you've traded this, you'll understand exactly what I mean. By keeping more premium on the call, I'm ensuring that into a down move, whatever IV spike is happening gets balanced. And into an up move, anyway, IV crush is happening. So call is not gaining so much. So we had this, once again, we moved down. I was completely fine because I had far more credit on my call side than put side. Recovered. And once we came here, I was in about 10-point profit. And my idea was that either this particular swing, which is once again the open high, this particular opening level gets taken out, or this swing breaches. I will be exiting. So just here, exactly at about 12:10, when we made this test, is where I took my exit. I'll go over that as well. So you can see I've exited around 12:11, and I will tell you exactly why. See, till there, first of all, I had a negative delta position, so I was protected. Whatever IV spike was taking place, I was protected. This particular swing here, this 31. Beyond this, I mean, look, if I was a buyer, option buyer, momentum trader, this is the kind of places where I want to take entry. So that is, as somebody who short that option, that is also my place to exit. So exactly here, 12:10. This candle, just as we were breaking, 31.5, I don't want to see. So 30, 30, 30, 30, I'm out. Now, just after that, just because you have to see, you need to understand where will the momentum build, when will you have that explosion. Many people say, okay, when do you know how to get out of an option? It's basically at inflection points like this. So when you know that, okay, after here, people who have shorted this option here will start covering, it's a good time to get out. And now it is gone all the way till 41 and then come back. Now it's come back to 31. All that you can't help. That look like a missed opportunity. You got to short it again and whatnot. But that is not my trading style. And yeah, so anyway, that's about it. The idea for the day was to risk about 5 points and a maximum, and then after hitting a 10-point target, just trail. Most likely, this position can lose a good amount of money further. I exited for about 55. It might end less than 50 also, but the risk to reward is not that good anymore to continue staying in the trade, which is why I'm out. Also, what happens is on Fridays, it can be a very good day for making money intraday strongly if everyone is dumping options since towards the end also they're like getting rid of long options. You'll see a good amount of decay. Otherwise, if there is expectation of volatility, which will continue to be there, considering that today again looks like there'll be all kinds of moves in on Nasdaq. So I'm not expecting too much further follow. It's very possible that it loses even 5 to 10 points also from here, but it's just not worth staying in the position. So thank you so much for watching. I hope you had a good trading day, and I'll catch you at the next one. Have a nice weekend.